let's talk about Colombo Dockyard. We're talking about a giant in Sri Lankan industry, but right now it's caught in what you could call a perfect storm of financial trouble. Today, we're going to break down this high-stakes battle for survival, from the absolute brink of crisis to a potential and pretty dramatic rescue. Let's get into it.
So it really all boils down to this one question. Can this historic shipyard actually survive? I mean, it is facing some serious gale force headwinds, and the stakes for the company, and frankly for the Sri Lankan economy, well, they couldn't be higher. Let's unpack what's really going on here.
It all starts with one absolutely staggering number, 30.8 billion Sri Lankan rupees. That's the mountain of debt the company was sitting on by the middle of 2025. This figure, right here, it's the anchor weighing down the entire operation, and it's exactly what makes this whole situation so incredibly urgent.
Okay, so first up, let's really get a handle on the crisis itself. We need to break down the challenges that have pushed Colombo Dockyard right to the edge.
The first half of 2025, it was just brutal. The company posted a net loss of 1.45 billion rupees. But here's the thing you need to understand. This wasn't because they forgot how to build ships. No, the real killer was the absolutely crushing finance costs from skyrocketing interest rates. This whole situation got so bad it landed them on the ColomboStockExchange's official watch list, which, as you know, is a massive red flag for any investor.
And on top of all that debt, their revenue just fell off a cliff. In the 2024 fiscal year, it dropped by a massive 30%. I mean, think about that. When your income drops that hard while your borrowing costs are going through the roof, you are sailing directly into a crisis.
But just as the ship seemed destined to go under, a potential lifeline appeared on the horizon. And that's when a crucial new player entered the scene, Mazagon Dock Shipbuilders, all the way from India.
What we're seeing here is a fundamental shift, a real changing of the guard. The longtime majority shareholder, Japan's Onomichi Dockyard, is out, and stepping in is India's state-owned Mazagon Dock Shipbuilders, or MDL. And they're not just buying a piece, they're taking a controlling 51% stake. This isn't just a change of address on the letterhead, it's a complete strategic pivot.
Now this deal is about so much more than just a cash bailout. Don't get me wrong, that capital injection is absolutely vital to tackle the debt. But what's just as important is MDL's deep technical expertise and, this is crucial, access to the massive Indian supply chain and defense markets. It's a comprehensive, three-pronged rescue mission.
So, with a new captain at the helm, Colombo Dockyard is charting a totally new course. And you know what? We are already seeing the first real, tangible results of this brand new strategy.
And here it is, the first major piece of evidence that this whole turnaround plan is actually working. We're talking about a landmark contract that signals a huge shift in the company's focus and what it's capable of.
On November 3rd, 2025, the company drops this bombshell, a deal with Orange Marine of France to build two highly specialized 100-meter-long ships for laying and repairing undersea cables. Now, why does this matter so much? Because it proves they're pivoting away from lower-margin work to complex, high-value projects. This one contract is an enormous vote of confidence in the new game plan.
This gives us a little peek at the potential upside here. So, Colombo Dockyard currently trades at a price-to-book ratio of about 8.1. That's basically a measure of its market value compared to its assets. While its new Indian peers like MDL, they trade at a much higher ratio, somewhere between 10 and 12. So, if this turnaround actually works, there's a really strong case to be made that Colombo Dockyard's valuation could climb to match its new peer group.
But okay, let's not get ahead of ourselves. The ship may have changed course, but it is not out of the storm yet. Not by a long shot. There are still some pretty significant hazards on the road ahead.
So here are the key dates you gotta watch. We saw the big contract win and then the hold rating from analysts that followed. The next massive hurdle is that Colombo Stock Exchange watch list deadline on December 11th. Getting off that list, that's gonna be a critical milestone for rebuilding investor confidence.
And we have to be realistic about the risks that are still out there. Look, winning a contract is one thing. Actually building it on time and on budget is a whole other ballgame. Then you've got the constant threat of price and currency swings, supply chain headaches, and of course, ongoing regulatory scrutiny. This journey is far from over.
So we're left with this. Colombo Dockyard has a powerful new partner, it has fresh capital, and it has a much smarter strategy. But with some very real risks still looming on the horizon, the big question is all of this going to be enough to finally navigate the storm and reach a safe harbor? I guess only time will tell.